Hey everyone, welcome back to Corporate Decoder. Today we're diving into TopBuild Corp's latest quarterly report. Think of it as reading the instruction manual after you've already built the thing and discovering you forgot to install the self-cleaning feature. Oops, this report, it's a mixed bag. Sales are down, but they're still buying back a ton of stock. What does it all mean? Let's decode it, but before we do that, if you like getting straight insights from corporate documents, make sure you're subscribed and join our Discord community. The link is in the description. Alright, this report is for the period ending March 31, 2025. It's basically a snapshot of how the company performed financially over the first 3 months of the year. First off, TopBuild as a company is in the business of selling and installing insulation and other building materials. They have two main business areas which they call segments: installation and specialty distribution. Let's look at some numbers. Scrolling down to the balance sheets, they have about $406 million in inventory. That's how much all their materials and products are worth, sitting in warehouses and ready to be sold. Then there's cash on hand, which is about $309 million. Looking at what they owe, they have accounts payable, what they owe their suppliers, that is, totaling about $423 million. Finally, their total equity, which is like the company's net worth, is $2.1 billion. Moving on to the income statement, which shows how profitable they were. Their net sales were $123 billion. After taking into account the cost of what they sold, their gross profit was $351 million. After subtracting all the operating expenses, the company made an operating profit of $177 million. And for every share of stock, they earned $4.25. They had about 29 million shares outstanding. Comprehensive income is what remains after some translation adjustment, and it comes out at $123 million. Moving on to the cash flow statement, we can see how the company is doing with cash and how it uses it. They brought in $153 million from their operations. They spent $13 million in investing activities. This likely includes buying equipment or other investments. Then, in terms of financing, which includes things like borrowing money or buying back shares, they actually spent $231 million, a considerable amount. The impact of exchange rates on cash was negligible at $101,000. Overall, their cash and cash equivalents decreased by $91 million this quarter. They had $400 million and ended with $309 million. Next, let's take a quick look at how equity changed over the past few months, starting at the end of 2023. They issued stock options that increased equity. They had a few comprehensive income adjustments. The company ended March 31, 2024 at about $2.7 billion total equity. Okay, time for what's changed in their accounting. It seems they've adopted some new rules around segment reporting where they break down the company into different operating areas. This doesn't change the numbers, just how they show them. There's also a new rule about income tax disclosures coming soon, which will affect how they explain their taxes in the future. Now, let's dive into their revenue numbers more closely. They provide a breakdown of where their revenue comes from, dividing it by market type, residential and commercial industrial, and segment installation and distribution. They made $774 million from residential and $464 million from commercial industrial. They also break it down by product type, focusing on insulation and accessories. They also sell glass, windows, gutters, and other items. They still have $315 million in the pipeline related to multi-year performance obligations. Let's talk about what is working behind the scenes to keep everything chugging along. Scrolling to goodwill and other intangibles, these are assets you can't touch but have value. The company says it has about $2.1 billion in goodwill, which is what they paid above book value, and about $540 million in other intangible assets. Goodwill is mainly from the installation segment. They amortize some of this expense over time. That amortization is about $18 million over the last 3 months. Long-term debt, this is what they owe the bank. Total debt is $1.3 billion, divided into long-term debt and current portions. The 3.625% and 4.125% bonds make up most of it. The rest is a term loan. Their credit agreement puts some rules around what they can do. They need to keep a certain net leverage ratio and interest coverage ratio. Things that are used to measure financial safety. They say they are in compliance, so that is good. They estimate what their bonds are worth on the open market if they were to be sold. It is a little lower than what they think they are worth. This is an estimate. They break down their numbers to show you what each segment, installation and distribution are doing. The installation segment accounts for $70.45 in sales, with distribution accounting for $505 in $9 and $599. Installation brought an operating profit of $129 and distribution brought $69 They paid 25.7% in income taxes. Share-based compensation is when the company gives away stock or options to the employees instead of salary. It was about $5 million. They are really busy buying back their stock. It looks like a significant chunk of cash went towards share repurchases. During the first quarter of 2025, they spent 217 million to 1 shares. They have another 973 million to 881 shares. They have another 973 million to 81 shares. They have another $72 million left in the plan. Looking at how they have been growing, they bought some smaller companies, Brabble, Morris Black and PCI. Not huge deals, but helps them expand. Their contractual obligations haven't changed much. They are still obligated under contracts with a bunch of bonds outstanding. Let me see. Skipping over the mine safety disclosures. There's nothing to disclose regarding Rule 10b5-1 trading arrangements, insider trading. Finally, the signatures from the CFO and accounting officers. Ted, now looking at these numbers more broadly, TopBuild's report paints a picture of a company at a crossroads. Their aggressive stock buyback program can be seen as a way to boost share prices in the short term, but it also raises questions about whether that cash could be better invested in growing the business or reducing debt. On the surface, the company is still profitable, but that profitability is down compared to last year, pointing towards some concerning pressures on sales volume and margins. It seems that some of those acquisitions are not adding value and the company is just buying sales with no profit. While they are making acquisitions, the commercial industrial sector seems to be promising, but their core residential market is facing headwinds. TopBuild is at a really tricky time. They're balancing short-term financial maneuvers like stock buybacks with the need to adapt to a changing housing market and maintain their profitability. One wrong step and they are done. Alright, that's our breakdown of TopBuild's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.